Hi, everyone, and welcome to the Savvy Business Show. My name is Hanneke. I'm your business coach and the creator of the Savvy Business Masterminds. So with me today, I have Nicole Peterkin, and she's going to be talking to us all about savvy financial planning while running your business. So, Nicole, that's totally not how I said I was going to introduce you. So now I'm going to throw it to you to just give us a little bit more about how and what. I always do this, guys, by the way, with these intros. I'm like, this is how I'm going to do it. And then halfway through, I'm like, no, we're going to do it different. So here's Nicole, and she's going to tell us a little bit more about what she's doing right now. And then we're going to go into some very cool tips on how you can run your business more financially savvy.
Cool. So I got into financial planning because my dad suddenly passed away, and I realized that my mom was making a six-figure income, but as part of like the delegation of responsibilities that typically happens in a marriage and in a relationship, she really just delegated all of the finances to my dad and had no idea what was going on. And I just remember thinking, oh my God, there's such a gap in the market. Like, women need financial planning, women need financial help. And I thought that I was going to be the one to give it to them. You know, if your husband passes away, you get divorced, whatever. I just kept feeling really strongly that nobody should rely on anyone else for their financial security. But when I started my practice, I realized that it was really hard to work with women because of those deeply ingrained like relationships and behaviors and the delegation. So even though I wanted to start a woman-centric practice, I actually started off, and most of my clients were men, and I was helping them with their cash flow and their investments and their planning. And I just started realizing that the industry is really focused on money management and not really on planning. And I started meeting a lot of small business owners who really needed help with the planning aspect. They felt like they were working hard, their revenue's increasing, everything's getting better, but still they're feeling guilty for going on vacation, or they're needing to put a vacation on a credit card, not having anything for retirement, not really having anything for their families. So I actually changed the way that I started doing planning from an investment-centric model to a more planning-centric model that worked really well for small businesses, but also worked really well for individuals who kind of needed the help with the everyday mechanics so that they could learn how to spend better, but also save better, right?
Yeah.
So to spend more on lifestyle, but also still be able to save and invest and grow.
Yeah. So something that you said that there is so interesting, because I do think, I know I follow a lot of money mindset people out there as well, is this strange relationship that women have with money. Like, you obviously, you just brought it up. So what are some of the pain points or the mistakes, or I don't even know how we want to phrase this, but what are some of the problems that you see with women that men aren't really experiencing? Like, what are some of these things that you see women run into that's sort of detrimental to us?
So it's funny because recently I've gotten a bunch of like younger male clients, and I feel like because they're younger, they're more vulnerable, I guess. So they've been more transparent about like their financial journey. It's not like the typical, oh no, I got this, I know everything. They're more like, well, you know, I know that I'm making more money than my parents. I know that I want to have more than them. So I've been like reading Tony Robbins' Money Master the Game. And I've been like looking at what John Bogle of Vanguard is saying. And I'm paying attention to Bitcoin, and I'm paying attention to my 401k. And so these young guys are like reading as much as they can. And they're kind of like learning about their financial opportunities, and then they're dipping their toes in. So I end up meeting these guys, and they're like, you know what? I realize that there must be a lot that I don't know, because I'm kind of like all over the place. I'm investing like a little bit here, a little bit here, a little bit here, a little bit here. I feel like I'm doing like a few of the right things, and I know my money's growing, but I feel like I could grow so much more, but I don't know where to put everything. And so they're coming to me for kind of like okay, what should I really be doing so that I can put the foot on the gas?
Yeah.
I meet women of all ages. They're kind of more transparent about like not really knowing what they don't know, but they're like all in cash, or they have no savings. And so they're kind of like reading and reading and reading and reading, but they never like buy the Bitcoin, or they never buy the index fund, or they never open the IRA. They just learn about everything, but they don't do it. So it's just really weird. You know what I mean? both are learning, but like the women are more like education junkies, but never implement. And the guys are so like, well, I know this works for other people, so let me try it.
Yeah.
It's weird.
So you know what I think what's happening there for us as women is it's this perfectionism thing, right? We got to get it perfect. And if we're not going to get it perfect, we are so risk averse that we don't do anything. Which is I think there's a lot going on, and I'll talk about this a little later on another topic, but we as women are really starting to run into a lot of trouble for ourselves in so many areas because we're trying to be perfect at it all and be this gold standard. And as a result, like we're losing out in the end because we're not taking risks, we're not trying things, and then we're also shooting ourselves in the foot when it comes to financial planning. Now it's turning out. So ladies, stop the perfectionism, go to Nicole and like make a decision.
It's with everything though, right? One of my coaches, I was telling her something and I didn't think that I was being a perfectionist, but she said perfectionism is a form of procrastination.
Yeah.
And I was like, oh shit, I am doing that. I'm like, oh, it's not ready yet. Oh, it's not ready yet. And it's like, I'm just procrastinating. Just pull the trigger.
Yeah.
So,
right.
It's true in everything.
And I wonder when we'll let that go. I sort of look at like the younger generation females today, and I wonder whether we're going to be able to get that out of them, or whether this is sort of the human condition of being female, that we have this so far ingrained in us.
Yep.
But I know I've had to majorly in my business and in my life, like let go of that perfectionism because it causes so much pressure as well.
Yep.
And so for me, definitely, it's like the more pressure I have on myself, the less things happen. Like the less stuff happen in my business. That's like interesting to hear that we're also taking that to our financials, which is not good. So tell me, Nicole, like what is when you're working with small entrepreneurs, like what is the number one thing that they're getting wrong, or the biggest mistake that they're making with their finances that you've observed?
I think the high level thing is not keeping business and personal separate, in the sense that they're not considering their personal, they're not considering themselves like their most important employee, right? So they're working for, $10 an hour, but then they're paying their VA $20 or $30 an hour. And so they literally cannot do their own financial planning because they kind of get in this like wheel of, I'm reinvesting in my business, I'm reinvesting in my business, I'm reinvesting in my business. And I've seen it with entrepreneurs who are making like 50 grand a year. And I've seen it with entrepreneurs who are making 750 grand a year. And it's the same thing. It's like, okay, I have 750,000 in revenue now. You'd think that I've made it, but I still don't have a retirement account. And I still don't have like personal savings separate from my business savings. And I still don't have all this stuff going on because I'm kind of just like, well, I need to hire the next employee. I need to get this client, and I need to raise my prices a little bit, and I need to do all of these things before I do it right. And it's like, no. Same thing with any habit. You have to get the fundamentals down. And like when you make your first dollar, no matter how hard it is, you have to put something away for yourself. And whatever you're putting away for yourself has to be able to like cover what you're eating, cover your discretionary, cover like you having fun, and cover some savings, because the $5 that you're spending on your coffee could just as easily go into your emergency fund or go into your IRA, but it's not looked at like that.
Yes, exactly. So it's funny you should say that, because in my mastermind groups, that's like one of the first exercises in specifically the side hustle startups. But then I'm also like really always flabbergasted and sort of just, wow, like really, I'm saying this to even the 750,000 people. Like, you got to track your money.
Yep.
You have got to start tracking your money. You got to start like knowing where things are going. Like have a little spreadsheet. It doesn't have to be complicated, but really knowing your finances is so key, because I think it's going to help you work smarter and realize where you're like spending time working for $10 an hour, where that should be outsourced. You should never be the one doing the $10 hour work. But it also like helps you just get comfortable with what is going on, and then seeing that bigger picture that you're talking about of like how actually you can move things around and how you can separate your personal and your business finances. So I love that.
Mm-hmm.
Wonderful. So okay, so they're not doing that. And so what are some of your pointers that you would how do you get people to get started? So for me, and I mean, I'm not a financial guru at all. I just came from a finance background, and I've done a lot of the money stuff with coaches. And so that's where I came from with the tracking part. But what else do you normally ask like people in the beginning? Like what is like one step that they can take away today that they're like, okay, Nicole said I should do this. I'm going to start doing this, and then I'm going to call her later and tell her the rest.
I think something that I see a lot is like double counting money. So I think that if you have all your money in the same one account or the same two accounts, and like savings is savings and spending is spending, then it's really hard to really see where you're making progress and where you're not. So I usually recommend that people like do an allocation where if all of their money is coming in through their business checking account, have all your money come in through your business checking account and then transfer it out into different accounts. And if it needs to be at different banks, it's at different banks. If you need to name the accounts, name the accounts. But it's really different when you say, okay, this money's going into my tax account. This money's going into my personal checking account. This money's going into my whatever, my like retirement account. Even if you don't transfer it to your retirement account right away, like just doing the allocation of saying, okay, you know, this money's going here, this money's going here, this money's going here. Then you start to get excited about like what the balances in the accounts are growing. And you feel like if you clear all the money out of your business checking account, or if you clear, you know, do your allocation, then you're not confused the next month when you like you have a great month, you have a $30,000 month, and then the next month you have a $5,000 month, but you didn't realize that you had a $5,000 month because you still have the money lingering in your business checking account, and you have no idea that you've like lost momentum or don't have a client or need to pull back and not invest in your website right now.
Yeah.
Like you can't make those decisions if all the money is just sitting there and you're confused, because guess what? A lot of stuff's going on. Like personally in business, it gets chaotic and it's hard to pay attention to everything. But our nature is like when you look at your checking account, if there's no money there, you spend less, right?
Yes.
Like,
and also, like, yeah. But now that we'll go to the other extreme, right? Because when you do that, I know in the beginning when I started doing that, because I have all the accounts that like everything goes to a different account. Like there's the tax account, there's my personal savings account, there's the business profit account, and then there's my wages account, right? But then the one thing that you have to prepare yourself for, guys, because this took me a little bit to get used to, is that current account, we're going to call it, which is the business operating account, basically where all the money comes into. It's okay if that thing is at zero, because that means you've paid out everything else that needs to happen. It's okay if it's at zero if you're talking and doing it the way Nicole just said. If it's at zero and like you're not doing all of this, then we need to talk. Like then hire me and Nicole to help you to make more money in your business. But I must say that was a game changer for me in my business. I know when I started doing that. And then another thing that helped me was that whole like the business profits account, actually having an account that acts as that business savings account or profits, whatever we're going to call it. And I think I got that idea from Profit First, I think is the name of the book.
Mike Michalowicz. Yep, I love him.
Yeah, so I really enjoyed looking at it from that point. So people should totally go and read that book. But then while they're buying that book, you've written a book, Nicole. Tell us a little bit about that book. And I know we can find it at Amazon or at NicolePeterkin.com. And all going to be linked in the show notes and in the blog notes. So tell us a little bit about that. And what is it about? Who's it for? What's it going to help us do?
So it's called If You Love Your Family, Save Like It. And it's basically just conventional wisdom turned on its head. Like I feel like that I was in business for a couple of years, or I forget if it was 3 or 4 years, and I started getting frustrated because I'd meet with all of these people who were doing all of the right things, but all of the right things had nothing to do with where they were trying to go, what their aspirations are, what their income was, what their family goals were. So they're just operating off of these like, oh, I need to buy a house. I need to buy a house. I need to put money in my 401k. I need to whatever it was, right? They need to do all of these things. But at the end of the day, they weren't really growing their net worth. They weren't really paying down their debt. They weren't really doing everything that they needed to do because it wasn't really aligned with what was really important to them. So the book is kind of like picking each, like, I think it's 7 or 8 different pieces of conventional wisdom and kind of turning it on its head and saying, okay, if you follow this conventional wisdom and this is your situation, it might work out okay, but look at it from this alternate perspective. So it's teaching. It has like a lot of like stories so that you can kind of grasp the client examples, but then it's a workbook so you can kind of work through and say like, ooh, where am I kind of buying into this like faux wisdom from all these talking heads that like actually doesn't really apply to my situation, is hurting me. So it's a way to kind of like do an analysis of your financial situation and kind of make tweaks to set yourself on the right path.
That's awesome. That sounds like a book that every person should at one point read in their life, right? Just to get back on track. And I love what you just said there about making sure that what your goals are is actually in line with what you're doing financially. I think I see this with my clients a lot too, and it's totally different, but we all have to realize that we want to get our goals and our actions aligned, whether it's financial, whether it's business, whether it's personal. I hear way too many times where people have, these are my goals, but if you look at them in their life, like they're totally moving in the opposite direction.
Yep.
And it sounds so simple, but it is something that we all, I think, every now and then just get confused by, or we get sidetracked with, the new shiny object, specifically with you're an entrepreneur. Then it's like, woo, maybe I'll go and do this thing, right?
Yeah.
So it's so important, definitely, for everyone to always go like, okay, where is my goal? What are my actions? And are my actions definitely going to hit that goal or not? And if it's not, and you don't know how to make these two, reconcile the two, then obviously go and find yourself some help in whatever area of life it is, whether it's relationship, business, financial, whatever that may be. Now, I was going to ask you about healthy cash flow, and I don't know whether that's too broad of a question to ask, because it's so different for each company and each business. I'm going to leave it open to you. Can we ask that question? What does healthy cash flow look like? Can you answer that to a broad audience, or is that something that should be personalized?
I mean, on one hand, it should be personalized, but on the other hand, like, it always depends on your goals. And I think that sounds throwaway, but so for an example, I have one client who literally spends like 70% of her business revenue back into her business, doesn't pay her own taxes, no money's basically going into her, or very little bit of her revenue is going into her personal life. And she's making 6 figures, but she's really happy and she's still grinding it out and she loves it. And when you talk to her about what her goals are, like building a retirement account and building savings really isn't a priority for her, even though maybe it should be, because her husband has a lot of money and pays for everything. And she doesn't have to contribute to the household. They don't have any kids. She doesn't, you know what I mean? So it's like, okay, is it a bad thing to spend 50% of your income on your office? Like, yeah, probably. If you ask anyone, is that a bad idea to spend 50% of your revenue on your office overhead, on your office space? Yeah, that seems like a poor use of money, but are there people who like choose to live in a penthouse suite and like that penthouse is 50% of their income or is a huge part of their income, but they're making $1 million and they love it and they don't care and it's not hurting their lifestyle? Like, yeah, absolutely. So it depends on where you stand and what you really want. So I think that like you need to figure out how much you need to make in your personal life to make you happy. Like, how much net revenue do you need to make you happy? And what does that look like? Like, if you're taking home $100,000, what are you spending it on? Are you living where you want to live? Do you get to travel as much as you want to travel? Do you get to eat what you want to eat? Do you get to whatever? And then beyond that, like, when do you want your assets to start paying for that lifestyle instead of your work? So if you have a business that you can't sell, okay, well then you need to invest somehow, whether it's stocks and bonds, whether it's rental property, whether it's whatever. You need to somehow create passive income or create something, or create like a sellable business, or be able to like transition that business onto somebody, create a business model that like lets you get out of that so that you can live the lifestyle that you want. so you're not forced to like grind it out until you die, right?
Exactly.
So it doesn't matter if you can be happy on 50 grand, or if like all you need to come up with is your own like little spending money because you're really all set and you know that you're all set. And if your husband or whoever you're financially responsible to or for dies tomorrow, you're totally fine. Okay, whatever. It's not for me to judge you. I really don't care. But if that's not the case and you really need to be responsible for your own financial life and you want X, Y, and Z to happen, then if you need to take home 100 grand and you're making 200 grand, there isn't a lot of room for you to like willy-nilly spend on everything and say like, oh, this is a business expense. That's a business expense. I can spend 50 grand a year on rent. Like, no, you can't, because it's not aligned with the life that you want to live. You're going to get burned out and it doesn't make sense. So what I think is like, everyone needs a gut check, and it's easier to gut check yourself if you do percentages, because I think that like, I grew up, I'm not good with money mindset that's not my forte.
Mm-hmm.
I think my own money mindset is good, but I don't know how to like teach it.
Yeah.
But I do know that like, I grew up in a household where it was like a lot of broke mentality. Yeah. So it was like, everything's so expensive, blah, blah, blah. And so I still catch myself sometimes. And when somebody quotes me something, it's like, oh, that's really expensive. I catch myself saying that's really expensive. And then it's like, well, compared to what? What percentage of my income is this? What am I going to get as a return on investment? Like, is this really expensive, or am I just like falling into like $100 for a pair of jeans is expensive? Like, I'd rather spend $100 on a pair of jeans right now. $100 is dinner. It's not even dinner for one night.
Not anymore.
But I can wear these jeans 20 times. So like, it's easier to do that when you're surrounded by your peers, which is why I think that your masterminds are so cool. Because if you're making 7 figures and you're around other people who are making 7 figures, it's easier to gauge yourself to say like, okay, do I have a healthy cash flow? Are my expenses in line properly? Do I have accountability from people who are actually at the same level as me and who actually have the right perspective? And it's the same thing whether you're making 5 figures, 6 figures, 7, it doesn't matter what you're making, but like you're in a bubble, right? You're in like all of these like small business networking groups. So you're around other people who you have no idea what they're making behind the curtain. There's no transparency. There's no way to really tell. Yeah. And people are like pretending that they're spending this much money, or really are spending this much money, but they're broke. And other people are like, oh, you're going to spend $10,000 on a website. You're going to spend $20,000 on a coach. It's like, yeah, I am. Who are you? You know, like the people who are giving feedback have no like vested interest in the outcomes if you say how you do or don't spend it. So if you do percentages, then you can do a gut check and say, oh, I feel like I'm saving a lot of money, but I only saved 10 grand this year and I made 500 grand. That's a really small piece of what I made. I'm not saving enough, or I'm not investing enough, or I'm not. If you don't have the people to do it, if you don't have a coach, if you don't have a financial planner, if you don't have a coach, if you don't have peers who are making the same money as you and who are willing to be transparent and vulnerable, then you have to do the work yourself, and you have to actually be the hard one to say like, am I fooling myself? Am I really spending like 70% of what I'm making and I'm not investing for the future? I'm not setting myself up for what I really want. I'm not able to take a 3-month vacation if I wanted to, even though I make a ton of money. That's stupid. Why am I doing this?
Yeah, exactly. You know? Yeah, and it's interesting you should talk. So I do a lot in the masterminds, about the money mindset, because we all do come from different stories and different backgrounds, and I see it play out with like for instance, me and my sister-in-law a lot actually, where like I'll notice in her stuff that she'll say, and I say it too, but it's like I'll hear her say it and I'm like, oh yeah, like that's compared to what is something expensive, or you know. And I know like, so in the money mindset realm, it's more thinking about, it's not really expensive, it's I choose not to use my money that way, right? Like starting to realize that we have this choice with our finances, with our life, and we can do it however we want to do it, but we have to go into that choice. And what is your story around money? Are you excited and happy about money, or are you constantly pinching your pennies? You know, and you want to get, you know, more comfortable with that money story for sure, because it's going to help you to actually make all these investments in your business and also divvy up and do these percentages so much easier for sure. Mm-hmm. All right. Well, Nicole, this was so exciting and fun to have you here. Is there any like thing that I skipped, like any final things? Like we've talked a little bit about retirement. I don't know whether we wanted to do that a little bit more or whether we're good on that. Whether
No,
you
it's up to
have
you.
anything.
We can talk a little bit more about retirement.
All right, so let's like do that because it's actually, I feel like I've been on a couple of podcasts lately where it's definitely a hot topic of how as a culture we are not saving enough for retirement. So when you're looking at the broad spectrum, what is that percentage that people can start to invest and put away for retirement? What if you're starting, because it's also different. Let's say you are 25 and then I'm going to go 35. And then, dear God, I really hope you have a 401k when you're 45. God, please. You're giving me anxiety. But okay, we're going to go those 4 points and like just see the percentage of what, you know, you want to save more or less. And again, guys, this is Nicole giving broad advice. If you want more detailed and personalized information, you really have to go and do your own homework, call Nicole, get in touch with a financial planner. But this is just broad audience, so take it for that.
Yeah, I think the general rule of thumb is that 10% of your income should be being saved towards retirement, no matter what your age is. And I know that, like, obviously if you're older and you have no retirement savings, you need to save more, but it also depends on like what you are or aren't willing to sacrifice. So what I tend to see is when somebody's older, I've met 50-year-olds that don't have any retirement account investments, but they've been spending their entire income this entire time. They haven't been saving anything. So to get them to save 10% is a lot. To get them to save 20% is a lot. So like even for them to save 5% is a lot if they're saving nothing. So to even get them to start saving that, usually you'll start talking to them and they're like, okay, well, if I save, 10% instead of 20%, then what does that look like? And they're more willing to make concessions to say, you know what, we messed up. We should have saved more, but we didn't. So instead of like putting us in the poorhouse now, like what can we do?
Yeah.
But I mean, I think a good rule of thumb in general, like retirement aside, is to put 20% towards savings. You should be putting money away into some kind of account that has long-term investment potential. It doesn't have to be like a 401k. If you're planning on retiring at 40 or 50, you can't use money from a 401k. So it does have to like be in line with your goals. But I think that the biggest mistake that I see entrepreneurs making is that if they are saving for retirement, they're waiting until like the end of the year. They're waiting till tax time. Like I get all the phone calls of like December, January. How much do you think I need to put in my SEP? How much do you think I need to put in my simple IRA? How much do you think I need to put in my whatever? Because they're just contributing to reduce their tax burden. But if you look at how much they're putting, even if they're putting 10 grand into the thing, in some cases, they're putting 10 grand because they made 300 grand. And so it's the percentage thing again.
Yeah.
And what I see when they do that isn't just that they're putting less as a percentage, it's that then they're kind of timing the market. So if you've heard anything about investments, it's like, don't time the market because you don't know if you're buying high or low or whenever. And when you buy investments or buy into the market once a year, well, then you could be buying high, you can be buying low. And I've seen so many people like put money into their investment account one time a year and the market was up and then their account's been down for the next year or the next 2 years because they just threw it in there. And it's like, well, that was such a waste because you want to work, it's so cliched, but like you want to work smarter, not harder, right?
Exactly.
Like you have to earn that dollar. You want that dollar to make as much money as possible. And the way that money grows in investments is by time and by compound interest. So you putting away money every day or every week is much, much better than putting it in once a year. And you don't have to be neurotic and put money into your investment account every single day to like, to buy
I
it
want to
at
meet
different
that
times.
person. I want to meet that person who does that because that would be interesting. Yeah, mine is sort of, so just to like sort of say how I'm doing mine is mine goes off once a month and it's automatic. I don't have to do it so that it happens. And that normally works really well because most of the articles that I have read and then coming from my finance background is like, you really want to make sure that you are not the last person that you pay. Like recently I read this really cool article about like, don't let your creditors come before you. Take care of all of the other things that need to happen, your savings account, your 401k, all of that first, and then your creditors can have some of your money. Because otherwise we fall into this trap of like, oh, but I got to pay down this, like this date first and that date first. And then when there's some money left over, and then if you have a really good year, and you didn't stay on top of your tax stuff, then the tax man's going to come at the end of the year and go, oh, that $5,000 that you wanted to pay in, we need it now, please. So I'm totally with Nicole there. It's like, just pay it as you go, guys. Do it as you go. And it definitely does work. Then it's sort of, you don't even have to think about it. Out of sight, out of mind.
Well, and the biggest thing is that entrepreneurs have variable cash flow. So you see that it's like, well, I might only make $2,000 this month and I might make 20 grand next month. So how can I do it automatic? And it's like, well, if that's your concern, if your cash flow is really that volatile, you pay your rent and make decisions about whether you can go to dinner or get the car that you have or whatever based on the minimum that you think that you would always be able to afford.
Yes.
So do the exact same thing with your monthly retirement contributions. And then if you have a good month or a good week or a good day, transfer some money out into a like retirement holding account maybe. And then at the end of the quarter, you can hash it out when you're like, oh yeah, I did have a really great quarter. I killed it. I'm going to add that into my retirement account as like a fourth contribution of the month. That is so much better than not doing anything because you're afraid that you're not going to have any money.
Yeah. It just is that like getting a little bit more conscious about, okay, this is actually my bare minimum, and my bare minimum includes savings and the 401k as well. That's what I need to cover. I love that you just said that. Now, so we were talking about a lot of bank accounts. So how many bank accounts do you have, Nicole?
I have like 8.
Oh, really? So, oh, cool. I have 5. I was just about to say, am I crazy? I have like 5 bank accounts, and they all have like different names. They have typical names, like Dream Travel, and then taxes. That's so fun. But yeah, that's awesome to know. So, okay. So what do you put in all 8 of your accounts, if we may ask?
Oh my God. Okay. So I did the Profit First, like you were talking about. So anybody who is a subscriber to Profit First has at least 5 accounts, right? So you have your business account, which is where all of your business revenue flows through. And then you have your profit account, your operating account, which is your operating account for business expenses. So profit, operating, taxes. And then you have like your owner's compensation or your wages, which could be like your personal checking. So you at least have those 5 accounts. And then I also have separate accounts for employee, like other employee pay, not me, because I have other employees on payroll and I need to buffer that account. I have rental income. So I have an account for my rental property. I actually have a checking and a savings for my rental property. So those are my 8.
Very cool. That's wonderful. So there you go, guys. Like, go ahead and open some more bank accounts. It definitely does work really well, I must say. I really love having my money separate and knowing exactly what I have to spend and what's going on, just having that pulse. Well, Nicole, thank you so much for coming on and speaking to us today and educating us a little bit more. If you need to get a hold of Nicole, her information will be at the bottom. And yeah, thank you guys so much for watching. And I'll see you again next time on the Savvy Business Show.